There's a big risk environment right now that could take out a lot of investors, almost everybody. And you know this to be true. Almost everybody is asleep at the wheel. It's a bad day on the markets today so far. And I want to talk about that today. Plus, we're going to do a CNBC screen record, which is going to lead us into a whole bunch of layoffs that I want to talk about. And lastly, there's a choice between two stocks that I'm trying to figure out what to do. They're both incredible companies. I'm so stoked, and I want to talk about that in this video too. But we're going to start with the bad day on the markets. I checked at one point, it's down 400 points on that Dow Jones Industrial. All the other markets were trading similar to that. It came back a little bit, but it was still pretty down so far today. What's happening is a lot of investors are adjusting to the realization that the Federal Reserve might not lower interest rates at the speed they were expecting. Do you guys remember that we talked about exactly this a few times over the past couple of quarters about people are not understanding the potential of which way the interest rates are actually going to go? Everyone's just expecting that, okay, rates are coming down now, we're all in happy days and everything, and they're just letting their guard down, and now they're acting surprised. Nobody watching these videos on the Peter Leeds channel was surprised at all. The stock market has so much of this wrong right now. Okay, here's the CNBC homepage. You can see the markets. It's at 12:55 p.m. on Monday. You'll see the Dow is down 282 points, so it's come back quite a bit. Nasdaq's down, S&P is down, and so on and so forth. But I want to go through a few of these headlines. I found this is an easier way to get you the information in my comments in a quick way, not waste anybody's time, by just going by the main headlines on the front page of CNBC. This is the one that inspired the next part of the video where I'm going to show all about the layoffs that are going on right now. Market leadership is getting even narrower as the Magnificent Four takes over. You guys know in these videos I told you many times about the Magnificent Seven, and now those are the stocks that were leading the entire market. Almost all the gains were encapsulated in those specific stocks. And as market leadership narrows, now we're down to the Magnificent Four, it's just getting tighter and tighter to the point where we have to either go into a new growth cycle beginning now, or things are coming back down to reality. McDonald's and Starbucks blame Israel-Hamas war for weak sales. This is what I always talk about. If it snows, then a bunch of companies say, well, it snowed, so we didn't make as much money as we wanted to. And they're blaming the Israel-Hamas war. There's not really a lot of effect in America that you can blame on that actual war. Overseas, absolutely. But those should be held separately to the McDonald's and Starbucks sales that are happening in America. They're going to start blaming all the rain in California for why we're getting lower numbers. They just take whatever is the most relevant thing in the news. They say that's why we didn't make money. It's an out, it's a crutch. A lot of companies do this. Second atmospheric river in days churns through California, knocking out power and flooding roads. So if you have a company operating in Florida or Carolina and they come in with bad results, they could always blame the atmospheric flood in California. Paul Tudor Jones says the U.S. economy is on an unsustainable path, threatening markets. If anyone didn't already know that, then you're not paying attention. Maybe it isn't an S&P double top. Maybe the war doesn't break out more. Maybe the complacency doesn't matter. Maybe debts don't matter. And we all just have a happy life going forward from here. Going back to that headline, Snap cutting 10% of the workforce. I've been meaning to do this for a while. There's a lot of content out there in the ether. Many examples of companies or websites where they just, for free, will track all of the layoffs. And you can see how many layoffs there have been. This is from Mondo, and it's all the layoffs that have happened in January 2024. Look at some of the names on this list. Citigroup, Levi Strauss, Duolingo, iRobot, Time Magazine. We even had layoffs at Macy's, X, Paramount, TikTok, and the big one being Front Desk that lost 200 people, which is not a lot in the grand scheme of things, but for this company, that represented 100% of their workforce. These layoffs are going to eventually absorb out into the numbers that you're seeing reported by the governments when they're trying to tell you that the economy is strong. The unemployment rate will start to climb as soon as this recession begins, which will be relatively soon in my opinion. Dear Peter, I'm Emmanuel, and I recently subscribed to your newsletter. At the moment, I've only bought recently Pixelworks, and I'm very satisfied with how it's going. A great big hug to you from Italy. Well, Emmanuel, you should be pretty happy about that one. We put it out at January 8th, They got a huge deal with Disney. Pixelworks is doing incredibly well in the share price now. That's what we do. We find companies like this before they pop in price. Now, I want to give you a choice between two different companies. One is trading at about 90 cents with a PE of 15, $62 million in revenues, and net income of $8.8 million. The other one's trading at $1.60, has a PE of 27, $273 million in revenues, 32% sales growth, and a net income of $8 million. Both are showing clear technical buy signals. What would you do, assuming all other things being equal, because you couldn't know from the information I gave you which would be the better investment. But all other things being equal, which would you be more inclined to invest in? I'm still on the fence. I've been looking at these for days. I whittled it down from hundreds of stocks. I can't figure out which of these I like better. And everybody's going to find out at the same time tomorrow in the Peter Leeds newsletter. If you want to see these stocks when they come out, you can join the Peter Leeds newsletter at the link below this video. Works out to something like 40 cents a day. And that's one way to turn a small amount of money into a lot. We're here to help you try and land on your feet and make some money out of whatever money you have, avoid loss, help the people you care about, and try and get involved in some of these major opportunities that are all around you right now. That's what we do. We can help you with all of this. More and more currency liquidation, which is how they keep avoiding these government shutdowns. These are liquidate the currency. They liquidate your currency.